Well, the stock market is trying to rebound after a couple of days of losses, which includes Monday's that big free fall that resulted in the Dow and the S&P 500 wiping out all of their 2018 gains.
Omaha's retirement strategist Daryl Bryant joins us this morning to talk about the ramifications of this. Daryl is one of the area's leading financial advisors. He hosts a weekly retirement radio show in Omaha that airs Saturday mornings on 1110 KFAB, and he helps folks in Omaha plan for retirement.
Welcome back, Daryl Bryant. Good to see you, Daryl.
Thank you very much.
So we took a little roller coaster ride over the last several days, haven't we?
Been a little bit rough. You had 1,600-point decline Friday versus Monday. 8% decline, near correction, which would be a 10% decline. So, yeah, it's been a little bit of a ride, but the fundamentals are very strong. We're not too worried about it, and so we have very, very low unemployment. We have the best wage growth since 2009. Corporate profits are up. Corporate tax rates are down. So we've been calling for a correction for a long time. We're just the anticipation of when this is nothing terribly unusual. I see this morning we're up back up another point. So we've gained a large portion of that 8% decline back already.
So where does it stand right now? So it's getting better, right? Things are looking up.
Yeah, it never was looking bad.
It never was looking bad.
No.
Well, you hear that and you're like, whoa.
Well, you talked about this last week, though. You were talking about that correction. So where do things stand right now in terms of what do you expect from here? And I guess what was behind that big collapse?
Well, what we expect from here is reasonable growth moving back forward. But what happened was the Fed raised bond yields. September, you could get about 2.1 bond was the bond yield. Now it's 2.8. So money could be moving out of is moving out of the stock market into safer haven because we can get some kind of a reasonable rate of return. I know 2.8 doesn't sound so great, but it's better than a kick in the rear. So some money is moving over to the stock market. But as soon as Janet Yellen says that we're in an inflationary period, we're going to have to fend off inflation, then there's going to be some profit taking. Everybody's going to try to beat everybody to the punch. So if we have higher wages, we're going to have more spending money, right? If there's more spending money, there's more demand. If there's more demand, then prices are going to go up. If prices are going up, that's inflation, and they don't want inflation to get out of control. And so, knowing that an increase in interest rates will cause corporate profitability will decline if interest rates are higher. Mike, if you and I are running a corporation and our cost of borrowing goes up, our bottom line is going to go down, right?
Yeah, for sure.
So if our bottom line goes down, if we're going to evaluate our company is going to be worth less because it's not as profitable, okay? So understanding that that's on the horizon, people will quickly respond, especially professional investors, and they'll do their profit taking. And then that's it. So that's just the way it works.
In talking to this with my brother-in-law the other day, we saw the stock market drop, and the first thing we said was, there's an opportunity there. It's a good time to buy, isn't it?
Yeah. Well, you'd want to buy on the dip. So if you believe everything I just said, which
of course
we all do. Of course we do, Daryl.
Yeah, you're the professional.
I don't have a crystal ball. But fundamentally speaking, we're not going to make with our clients and certainly with my dollars, I'm not going to make some sort of a knee-jerk reaction to a dip in the interest rate or a dip in the valuation of the stock market because of something that Janet Yellen says, when I understand that the economy is fundamentally strong. So I'm not going to personally sell, nor am I going to have my clients be in and out of the market like that. However, if you had dollars sitting on the sidelines,
well, if you had some money to invest,
we're in the stock market, we're sitting in CDs or anything at all. We move cash back into the market during that dip. We'd want to buy low, right? So if we believe that this is just a dip, we believe it is, unless something comes along and fundamentally derails, something that we do not perceive at this time comes along to make a fundamental change in the strength of our economy, then I think we're fine. So there's no reason to be panicking right now, generally speaking.
No reason to be panicked. So what's your advice for those pre-retirees or retirees that are feeling really concerned and kind of uneasy at this time after this?
Yeah, so that's a great question. And here's the thing. Do I believe that the market is moving forward? Still, yes. Am I willing to bet my entire retirement on it? If I'm 64 or 66 or nearing retirement in the next couple of years, I know I have to keep things intact. No, I'm not going to bet my entire life savings on it. I want to participate in that, but that comes back to what we talk about regularly. Remember the eggs on that we do on the show here regularly? Well, we want to segregate those dollars that we know we don't need for a while because we've done some math. Well, we're going to put our foot on the gas, on those. But those dollars that we know that we're going to need in a couple of years, well, we wouldn't have those terribly aggressively positioned in the first place.
Well, when you get closer to retirement, you want to be a little bit more conservative in the first place. And in light of this week's stock market roller coaster, Daryl and his team are offering to do a complimentary portfolio review for the first 10 callers who qualify. And here's that number to call: 402-932-2141.
Once again, that's 402-932-2141 to get a complimentary portfolio review with Daryl and his team. You must be nearing retirement or already retired to qualify. And of course, you can always go visit Daryl's website for more information. It's dbryantretirementstrategies.com.
Yeah, so we saw that roller coaster ride, but not necessarily bad news.
Hopefully we'll get back to, we're bringing it into the, you know, the gate where they take the.
Right, yeah, exactly. Thanks, Daryl. We
Thanks,
appreciate it. Good to see you.